But that's not the point. The appropriate comparison is to gold. How
Right.
long would it take to move $100 million of gold?
Bitcoin is on the rise, recently becoming the seventh largest asset. But is it the right replacement for gold in reserves? Michael Saylor's bold idea could reshape how the US handles its money, positioning itself as a global financial leader. The question remains, is it wise for the US to embrace Bitcoin, or should it stick with gold for stability? Don't miss out on how MicroStrategy's bold moves might set the stage for significant changes in global finance. Michael Saylor's plan for US economic power with Bitcoin. Michael Saylor, the chairman of MicroStrategy, has developed an interesting idea to make the US a leader in the global economy. He thinks the US should sell its gold reserves and use that money to buy Bitcoin. According to him, if the US sold its gold, it could buy around 5 million Bitcoin, giving the country a massive piece of the global financial system. Saylor believes that Bitcoin is more than just a digital coin. It's a key asset that could change how the world's economy works. Right now, Bitcoin is the seventh largest asset in the world, and Saylor sees it as something that could give the US more power in the global market. So, by selling gold and buying Bitcoin, Saylor believes the US could secure its place at the top of the world's financial game. Bitcoin versus gold, which is more stable as a reserve asset. Looking at history, gold has been used as money for thousands of years and is trusted worldwide as a stable store of wealth. Bitcoin and gold are often compared as potential reserve assets, but are very different regarding stability. One of the key differences is volatility. Bitcoin is known for its substantial price swings because people buy and sell it based on speculation. This constant fluctuation causes Bitcoin's value to go up and down a lot, creating an unpredictable nature that makes it far less stable than gold. On the other hand, gold has remained steady in value over time and has a long history of being seen as a secure asset. Historically, gold has been used as a money for thousands of years, making it a trusted and safe way to store wealth. It's widely accepted worldwide, and its value is supported by its many practical uses in different industries such as jewelry, electronics, and dentistry. People feel confident holding gold as an asset because they know it has maintained its value for centuries. On the other hand, Bitcoin is still relatively new to the financial world, and it doesn't have the same level of global acceptance or centuries of history behind it. This lack of a proven track record makes people more resistant to trust it. When it comes to financial strength, gold can quickly convert into cash, making it a reliable asset, especially in times of financial trouble. This is important when a country or individual needs liquidity during an economic crisis. Bitcoin, however, can lose value unexpectedly due to its volatility, which can be risky when economic conditions are unstable. As a result, Bitcoin may not be the safest choice for those seeking a reliable store of value during tough times. Lastly, the cryptocurrency world, including Bitcoin, can be challenging to understand, especially for those not well versed in technology or finance. The market is full of risks, with prices that can change rapidly and without warning. This lack of clarity and the unpredictable nature of Bitcoin's value makes it harder to rely on than gold, a well understood and trusted asset. Because of these risks, Bitcoin is often seen as unreliable by central banks and governments who need something stable and secure to protect their wealth. Therefore, gold remains the preferred option for many regarding reserve assets. The potential impact of Saylor's Bitcoin proposal on the US economy. Selling gold to buy Bitcoin would expose the US economy to unpredictable market forces, making it more volatile. Saylor's proposal to sell off gold reserves and buy Bitcoin could significantly impact the US economy and its place worldwide. First, there would be significant changes to how the US manages its money. Gold has always been a stable asset, helping the US government protect its wealth in tough times. However, Bitcoin is much more volatile, meaning its price can increase quickly. This could make the US reserves much riskier because Bitcoin's value might change unexpectedly. On the other hand, some people think Bitcoin is a better way to protect against inflation. Unlike gold, Bitcoin has a fixed supply of 21 million coins. This limited supply could keep its value steady over time, offering a different kind of security. If the US starts using Bitcoin in its reserves, it might strengthen the country's financial system by adding an asset that isn't based on debt or affected by inflation as much. However, selling gold to buy Bitcoin also means exposing the US economy to new, unpredictable market forces. Bitcoin's price can fluctuate wildly, which could cause problems if it affects the US reserves. The overall stability of the country's financial system could be at risk, as Bitcoin's value could drop when least expected. This change also conveys that the US is embracing new technology and innovation. This could boost investor confidence, showing the world that America is ready to lead the way in new financial systems. It could improve the country's reputation as a forward-thinking nation in finance. Geopolitical implications of Saylor's Bitcoin proposal for the US. Using Bitcoin could align with the US's broader energy and climate goals, primarily if Bitcoin mining were powered by renewable energy. Creating a US Bitcoin reserve could help the country strengthen its position in the world. By embracing Bitcoin, the US might show leadership in the financial world, especially as countries like China are working on creating their alternative monetary systems. This move could signal to the world that the US is serious about staying ahead in global economic changes. At the same time, a US Bitcoin reserve could help protect the country from adversaries, increasing their gold reserves or exploring other ways to build financial systems outside of the US dollar. By integrating Bitcoin into its reserves, the US could ensure its economic strength and security, keeping up with the competition and ensuring its interests are safe. Moreover, Bitcoin could tie into the US's broader energy and climate goals. If Bitcoin mining were powered by renewable energy, it would support the country's push for a cleaner, more sustainable energy future. This could help with energy production and stability, aligning the country's financial strategies with its environmental objectives. Why some people are worried about Bitcoin replacing gold. Gold has long been trusted as a safe haven asset during tough times, and its value has remained steady. There are several concerns when it comes to replacing gold with Bitcoin, and these concerns mainly revolve around Bitcoin's volatility. Unlike gold, which has been a symbol of stability for thousands of years, Bitcoin's price is known to change dramatically quickly. This can make it a risky choice, particularly in uncertain financial situations where people seek something more predictable and safe to protect their wealth. In times of economic downturn or crisis, the last thing many want is an asset that could suddenly lose value, which makes Bitcoin's wild price swings a potential problem. Gold, on the other hand, has long been known as a reliable, safe haven asset. People have trusted gold to hold its value for centuries, even during war, inflation, or economic instability. Its value doesn't fluctuate wildly, making it a more secure option when times are tough. This stability is why gold has been a go-to asset for investors and governments who need something to rely on during financial crisis. If the US were to replace gold with Bitcoin, critics argue it could disturb this vital function. Gold's steady value provides a sense of security and confidence, and replacing it with an asset that can fluctuate wildly could create even more uncertainty and problems for both individuals and governments. In addition to the risks posed by Bitcoin's volatility, there are concerns about its long-term viability as a store of value. Gold has a long history of being trusted, while Bitcoin's place in the global financial system is still questioned. If the US were to rely on Bitcoin instead of gold, it could face more challenges during times of financial instability. Thus, critics argue that moving away from gold could lead to unforeseen consequences and may not be the best solution for ensuring economic stability. Do you want to know why Saylor thinks Bitcoin is the next big asset? Let's find out with us, but don't forget to hit the like button and subscribe to help keep these insightful videos coming. Saylor believes Bitcoin is the next significant asset because of its rapid growth and how much attention it's getting. Recently, Bitcoin has risen to become the 7th largest asset in the world with a value of $1.935 trillion. That's a considerable achievement, placing it alongside some of the biggest tech companies and traditional assets like gold. What makes Saylor so confident in Bitcoin is its unique features. He points out that it's the fastest growing and most in-demand asset. Not only is it fully digital and easy to use globally, but it also has a wide range of uses, making it more functional than many other assets. With all these qualities, Saylor sees Bitcoin as a leader in the future of finance. How MicroStrategy's Bitcoin strategy has changed the market? Let's find out. MicroStrategy's approach to Bitcoin has made waves in the market. The company now owns an impressive 402,100 Bitcoin worth about $40.09 billion. This prominent position has paid off well with a gain of around $16.6 billion or 70.72%, showing how well their investments have performed. What makes this even more interesting is that MicroStrategy's Bitcoin holdings stand out in today's market. They're one of the most prominent institutional players in Bitcoin, meaning they've set an example for other companies. MicroStrategy has steadily built up its Bitcoin stash, sticking to a buy and hold strategy even when the market was up and down. This steady approach supports Saylor's belief that Bitcoin can be a safe and reliable store of value in the long run. All in all, Saylor's idea to replace some US gold reserves with Bitcoin is a significant shift, and while it comes with risks, it also offers some exciting possibilities. The debate between Bitcoin's price swings and regulatory challenges versus gold's steady history as a safe investment is still going strong. This could have significant economic and global effects on the US in the future. Michael Saylor's proposal to replace gold with Bitcoin is bold, with the potential to reshape the US economy and its global standing. While Bitcoin offers unique benefits like growth potential and technological innovation, its volatility raises concerns about its reliability as a reserve asset. Gold, on the other hand, offers stability that has been trusted for centuries. So, what do you think? Should the US embrace Bitcoin and move towards a digital future, or stick with the tried and true stability of gold? Will Bitcoin's potential outweigh its risks in securing the US's financial future? Don't forget to like, subscribe, and share your thoughts in the comments below.